If your painting business is profitable on paper, but you still feel stressed every time payroll hits, this video is for you. If you clicked on this video, you're probably wondering the answer to these 3 questions. If my painting business is profitable, why does cash still feel tight? 2, why am I stressed about payroll, materials, or taxes even when sales are strong? And 3, what do I need to change so my business actually keeps cash in the bank? If we haven't met, I'm Daniel Honan. I'm a CPA and former painting business owner. And over the last 10 years, I've helped over 500 painting businesses from startup to 20 million know their numbers and save big in tax. And one of the most frustrating things I see is this. An owner looks at their P&L and sees profit. Sales are decent, margins look decent, crews are busy, but their bank account feels tight. They're using credit cards to cover materials. They're stressed about payroll. And they're wondering, if I'm profitable, where's the cash? Here's the answer. Profit is not the same thing as cash. And until you understand that, you'll keep feeling broke, even when your business is technically making money. Let me give you a simple example. Let's say you sell a $10,000 job. On paper, maybe that job shows a $4,000 profit. Sounds great. But now let's look at what happens in real life. The customer takes 30 days to pay. You pay labor within 2 weeks. You buy paint and materials right away. Your credit card bill comes due before the customer's check clears. So even though your books say you made money, your cash is actually negative. This is the trap. A profitable business can still run out of cash if cash is going out faster than it's coming in. And that is exactly why profitable companies still go under. So what causes this in a painting business? Usually one of a few things. Number 1, you're getting paid too slowly. Maybe you're not taking a large enough deposit. Maybe you're waiting until the end of the job to collect too much of the money. Maybe final payments drag out for days after the work is done. Number 2, you are paying too quickly. You're paying vendors upfront even when terms are available. You're paying subcontractors before the customer has paid you. You're running weekly payroll when your collections don't support it. Number 3, your owner draws are too random. You have a good month, you see the money in the account, and you pull the cash out too early. Then taxes, payroll, materials, and overhead hit, and now the account is tight again. And number 4, sometimes your pricing is too low, because if your gross profit is weak, you don't have enough room for overhead, owner pay, and a cash cushion. You may be busy, but you're on a hamster wheel. The business is working hard without really building the strength. So the first big takeaway is this. Cash flow problems are often not a sales problem. They are often a policy problem. Quick pause. If this is the kind of thing that you want to get better at, that is exactly why I wrote my book, Profitable Painter. It is built specifically for painting business owners who want to scale without profit leaks, cash surprises, and financial guesswork. If you want the full framework for profitability, cash flow, debt, owner pay, growth, grab the book for free by clicking the link in the description. Just cover the shipping. Now let's talk about how to fix cash flow. The first lever is simple. Get paid faster. For residential repaint work, 50% deposit is common in many states. If you're in a state with deposit limits, then use the legal maximum and structure an early progress payment. The point is the same. Stop floating the job out of your own pocket. If your gross profit is healthy, that deposit can cover direct costs that hit first. That means your customer is funding the job, not your credit card. Second, use progress billing. If a job lasts more than a week, bill during that job, not just at the end. A simple structure could be 50% at booking, 25% mid-job, and 25% at completion. That keeps cash coming in as costs are going out. Third, collect the final payment faster. Do not let the crew pack up, leave, and hope someone mails the check in 3 days later. Use a card on file when appropriate. Have a process for final collection. Make completion and payment part of the same workflow. Fourth, slow down cash leaving the business. This is where a lot of owners hurt themselves. If Sherwin-Williams or Benjamin Moore gives you net 30 terms, use them. That means you can buy materials now and pay later. And if needed, paying that balance with a business credit card can extend your flow even further, as long as you manage it responsibly and pay it off on time. Same thing with subcontractors. As much as possible, your payment structure should align with the customer collections. If you pay subs before you get paid, you are creating a cash mismatch. Fifth, look hard at payroll timing. Weekly payroll drains cash fast. For some companies, bi-weekly payroll creates enough breathing room to stabilize collections and reduce pressure. And six, track cash weekly, not monthly, weekly. Because month-end reports are too late if payroll is Friday. You need visibility into what's coming in, what's going out, and what jobs are starting, what deposits are due, and what bills are about to hit. This is how you stop reacting and start leading. Let me give you a real-world example of how powerful this is. I was working with a residential painting company doing $2.2 million with a gross profit of 44%. So on paper, the business looked solid, but cash flow was a mess. Why? No deposits had been collected. Materials were paid up front. Weekly payroll was draining cash before customer checks cleared. Once they fixed those policies by collecting a 50% deposit, using card on file for final balances, switching to bi-weekly payroll, and using store credit plus credit card float, cash jumped from $8,000 to $64,000 in 60 days. And that is the lesson. A lot of owners do not need more revenue to fix cash flow. They need better cash flow mechanics. So if your painting business is profitable, but cash is still tight, here's what to remember. Profit is not cash. A good P&L does not guarantee money in the bank. Cash gets tight when money comes in too slowly or goes out too quickly. So fix the structure. Take better deposits. Bill during the job. Collect finals faster. Use vendor terms wisely. Align subcontractor payments. Review payroll timing. Track cash weekly. That is how you stop being profitable on paper and broke in real life. If this video helped, watch my next video on 4 numbers every painting business owner must know to scale profitably.